everyone, welcome back to our channel Fintu and you're watching Friday First Cut series. I am Nidhi Manchanda, Certified Financial Planner and Head of Training Research and Development at Fintu. In today's video, we'll be discussing the difference between regular mutual funds and direct mutual funds. So if you also have confusion regarding these two different types of mutual funds and where should you exactly invest, then stay tuned as we'll be discussing this in detail. So let's start by understanding the very basic difference between a regular mutual fund and direct mutual fund. Now the difference basically lies in how you are actually investing into the fund. So if you are investing into a fund through a distributor, then it's a regular mutual fund, or if you are investing directly with the AMC, it's a direct mutual fund. That is the difference between the two. Let me take an example here. Let's say there is a fund SBI large and mid cap. Now in this SBI large and mid cap fund, you will have two different types. One would be a regular fund wherein REG will be written, and another fund which is direct fund where DIR will be written. Now both of these funds are similar funds in the sense that the investment objective of these funds remains the same. But the only difference is in one of the fund or the pool of funds, the fund manager will actually cut the commission part also before giving the returns to you. But in the other fund, which is direct mutual fund, where there is no distributor or a broker is involved, therefore there is no commission involved, and that is why a little higher returns are passed on to the investors. That's the major difference here. Now this commission which is deducted from the regular mutual fund is part of the expense for the AMC, and that is why it is also part of the expense ratio that we consider for comparing different mutual funds. Now when we talk about a regular fund, now in the example that I have just taken, SBI large and mid cap regular, here the expense ratio is 1.84%. But if we compare this fund with its direct peer, wherein the same fund but you will be investing into a direct mutual fund, SBI large cap and mid cap, there the expense ratio will be 1.10%. So we can see there is a slight difference between the expense ratio of both the funds, and this difference is basically the commissions that are being paid to the distributor for recommending and suggesting or advising a particular fund to you. So regular mutual funds will have a higher expense ratio and a direct mutual fund will have a lower expense ratio, and because of this the returns on these funds will also have this slight difference, wherein your direct mutual funds will give you 0.5 or 0.75% higher returns in most of the cases. Again, in our same example, if we compare the last 1 year return in this SBI large and mid cap fund, last 1 year return in regular fund category here is 4.7%, wherein if you talk about the direct variant of the same, it is 5.54%. So you can see the difference. Although we see that difference is close to 1%, but in the long term, this difference actually accumulates. Now this brings us to the question, also a very important question, that whether we should be going for regular mutual funds or direct mutual funds and which one is better for me. So majorly if I talk about this question, the answer lies in your requirement. The one, if I talk about regular mutual fund wherein the commission is being paid to the distributor, it is important if you are someone who doesn't know how to select a mutual fund and you are taking a help of a distributor and advisor who is helping you, giving you an advice where you should be investing your money, and not any random mutual fund that your friend might have told you to invest. Because someone is suggesting you a mutual fund to invest, that is your advisor, that's also a distributor, in that case a small part of commission is being paid from that pool of money, and that is why your return generated will be slightly lower. On the other hand, for example, you are someone who is very well versed about the market and you can take your own decision that which equity mutual fund or which debt mutual fund you should be investing into. You have that knowledge to select a fund. In that case, you can also invest into mutual funds directly. In that case, it will be a zero commission mutual fund and your returns will be slightly higher. Having said that, just to get a 0.5 to 1% higher return, if you are thinking to go for a direct mutual fund route, then you'll have to take a pause and think it through, because again the major thing is just to have a certain 0.5 to 1% extra return. If you make a wrong decision of selecting a wrong mutual fund, or you are not able to take the decisions at the right time for investing or maybe redeeming as well, then you will be losing much more than what you are actually trying to save here. So you'll have to make a decision considering that if you have that knowledge, you have that time, then you go for a direct mutual fund route. Otherwise, you can go through a distributor where there will be a person financial advisor who will help you or suggest you which fund to invest into. Apart from these two options, like either to go through a distributor or the second one is going through direct mutual fund route on your own, you can also consult a financial advisor who will be charging on a fee based. So the person will not be charging on the commission basis, and that is why it's a fee based financial advisory where you can consult a financial advisor, get that advisory as in which equity mutual funds to invest into, and once you have that information you can directly go to the AMC and invest into these funds. If you do this, so basically you are getting that expert advice from a qualified finance expert. At the same time, you are also able to invest directly into the mutual fund and getting a little higher 0.5 to 1% returns. So I hope this is now clear and you will be able to take a decision for yourself whether to go for a regular mutual fund or a direct mutual fund. For any further query, feel free to get in touch with our finance experts at Fintu, and for more such videos, do subscribe to our channel.